Let's talk new construction. What do you think?
Ooh, lots going on in the new construction zone right now.
Yeah.
I can tell you that HRM has fast-tracked a bunch of new construction lots, which is great news for people who live here in Halifax and really probably across this province. Yes. They fast-tracked several lots, which is really, very good for developers.
Yeah.
But that's going to translate into homes for people to buy. And some of the lots that they fast-tracked are, some multi-unit type lots that, could be apartments down the road, which is very exciting. And we need all levels of housing here. It's not just new construction single-family homes. We need townhomes. We need condos. We need apartments. We need low-income housing. We need seniors housing. We need all kinds of different housing, obviously in this market. And I think the city has heard the requests coming from the province, and I know the federal government is trying to motivate all levels of government to get these shovels in the ground, and I think it's great news. And I think when there's new construction, people will move up. Maybe they'll list their resale homes for sale, and maybe that'll open up some more opportunities for first-time home buyers.
All right, so tell us about the mechanics of a mortgage for new construction. You get a draw. How does this all work?
Yeah, there's two different ways that you can finance a new construction. The most popular way, and I'm going to go out on a limb and say 90% of the new constructions are done with a turnkey. So that type of transaction, and what a turnkey means is you as a buyer, you pay at the end. The risk is on the developer, which is the builder, and you don't pay until the builder gives you a home, that you have an occupancy permit, the home is all completed, and it's very safe. The reason that's the preferred method, it's safe for you, it's safe for them, and it's safe for the bank.
Yeah. Well, so, it wouldn't be safe for the developer.
Well, it's pretty safe for the developer because guess what? They don't have to worry about getting paid.
No, but they got to have the money to get to that.
This is true, but that cost is built into this construction, and or into the purchase agreement, we'll say.
Yeah.
And there's pros and cons on doing a turnkey. You're going to pay more deed transfer tax with a turnkey because you're paying deed transfer tax in the full amount of the purchase. So that's one downside.
Well, you do anyway, don't you? Pay 10%.
If you do a draw mortgage, you already own the land.
Oh, I see.
So you've only paid deed transfer tax on that lot.
Yeah.
The other other upside as
not a huge amount of money there though.
Like we're talking a couple $1,000s. Maybe $5,000, $6,000, $10,000 in the grand scheme of things. Yeah. In my personal opinion, I believe a turnkey is the best for everybody involved.
Is that right?
Now, I'm not saying that things cannot go wrong with turnkeys. I know, Todd, there was a news article here in Halifax that a developer basically has delayed with the intention, we'll say maybe untested intention, to wait these buyers out for with the hope that they're going to cancel their purchase agreement because they can resell these homes for $200,000 and $300,000 more than what they entered in this agreement prior to 2020. So I'm not saying that a turnkey is without fail. It is typically the safer route.
Yeah. So the other option would be you take a draw and you're kind of the subcontractor yourself.
Well, you could still hire you could still hire a general contractor. Yeah, you still could.
But you handle the draws and all.
You handle the draws, and typically when you do draw financing, and we don't currently offer this in our office, but certainly lots of lenders do, Todd. And when you do draw financing, you can either do a self-build or you can do a contractor build. If you do a contractor build, the contractor would have to have at least Atlantic New Home Warranty, or they would need to offer a one-off policy for Lux. If you do a self-build, you need a quote for every single dollar to build a house to 100%. Self-builds, as you can imagine, are very, very risky. You get hurt. There's cost overruns. You can't get the subcontractors in place. There's material shortage. I think draw financing is very, very risky. If I am, honest, I don't think customers are typically happy when we do draw financing. And, as a business, we basically decided we don't want to put clients in that risk position. Are we maybe cutting off our nose a little bit and maybe, giving up on some business that, we certainly did a lot of draw financing in the past, Todd? I think a little bit, yes. But guess what? That accounted for less than 5% of our business. And it's very, very time consuming. And usually clients aren't that happy because it's a lot of work.
Yeah.
And, things go wrong. And, we deal with obviously a couple different partners. And, many of the bank lenders have actually exited doing draw mortgages. It's just too risky.
Yeah.
And typically the cost for interest rate on a draw mortgage is higher than what it would be on a turnkey. So pros and cons to both. My professional opinion, I think a turnkey is safer. If you want to do a draw, we're not the place for you.
Yeah.
And I'll just, be very open and honest.
Yeah.
I'm not saying that we're never going to do a draw again. I'm not going to say that, Todd. It's just not our bread and butter, and we want to be experts at what we do every day. And we want to give good advice. And I think that's really how we've built this business, and that's why we've done over 4,000 transactions. We haven't done this based on like a hope and a dream. We've done this based on, hey, we have been tried and tested, and we can give expert advice for the types of transactions that we're doing every day.
So I would think on the turnkey, the developer would have to get some documentation from the lender. The money's there.
Yeah, we certainly have to give a letter of financing.
Yeah.
That's certainly part of the agreement. And as a buyer, you're going to give the developer, the seller, the builder, a deposit, and that's part of the purchase agreement. That deposit will be used towards your closing costs, and maybe that deposit is going to make up part of your down payment. You don't pay, and the mortgage doesn't close until the house is complete.
So just quickly, is there a lot of building going on? Are there a lot of opportunities?
Yeah, there's certainly a lot of construction.
Yeah.
I can say that, I think there's more resale homes kind of changing hands than there maybe are new construction. But there's certainly a lot of new construction happening all the time. And Todd, with all these lots that have now been opened up and fast-tracked, we're going to see more and more new construction. I'm excited. I think it's great business. And usually buyers who buy a new construction home, usually they make money.
How do people get a hold of you?
Check us out online. I think that's the first place to start. You can check us out at teamclinton.ca/radio. Lots of great information on our website. We have hundreds of blog posts, current rates. You can download our guide to homeownership and even, watch some of our videos from months gone by.
Yeah, you got it. Always a pleasure, Clinton. Thank you so much.
Thanks for having me.
That's Clinton Wilkins and myself, Todd Veinotte. Mortgage 101, your guide to homeownership. Thanks for listening, everybody.